pullback that I have here. And from where price currently is to where I expect it to trade into, it's over 60 pips. It's over 60 pips. So pretty basic. What am I doing next? Let's straight to my 5-minute time frame. And on this time frame, I'm going to be basically drawing up 4 key zones and watching out the 5th level to see when price gets there, how it reacts, and if it's in sync with my analysis, then I will be trading it, right? So 4 basic things that I do here. Just going to briefly mark out yesterday's high. And we can see that price has already broken above yesterday's high. I'm going to draw another rectangle and mark out day before yesterday's high as well. Give me a second. I'm trying to delete the previous rectangle here so you don't get confused by what I'm drawing. It doesn't look jam-packed. Better still, I'll just drag it here. So I'm going to use this to mark out yesterday's low. And then the 4th level I'll be marking out will now be the 4th level I'll mark out will now be my day before yesterday's low. It's very close to yesterday's low. So what do I see on 5-minute time frame now? I've marked out my levels. This looks very bullish. My 5-minute time frame is bullish as opposed to what I see on the higher time frames like the H4, the H1, the D1 as well. This guy is bullish. So I'm looking at AUD/USD for now. I'll be watching AUD/USD, waiting for it to get to this resistance level, which happens to be my day before yesterday low. And when it gets here and price rejects it, and I start to see break of structures to the downside with an entry pattern formed, I'll take a sell of AUD/USD. But for now, 5 minutes is pretty bullish, right? So I'll be waiting for price to get to this level. You can write it down. It's about 0.65692. Wait for price to get there. If we see reactions from that level, we're going to sell. If price breaks above this level and keeps buying, then we're going to see what the market is doing. Because if you look at AUD/USD on the D1 time frame now, my overall big picture for AUD/USD on the D1 time frame, our trend is way above here, right? So eventually AUD/USD is going to trade above and trade into this trend that we have here, right? So if price breaks above this 5 minutes and continues creating structure to the upside, then we'll now know that maybe price will start creating a new trend, because at the end of the day, price is fractal. So if lower time frame starts doing something, eventually the higher time frames will catch up. But for now, we're still very much bearish, right? So if price gets here, we see entry technique formed, we're going to enter. If no entries are formed, we're going to stay out and see if price just keeps breaking above. But you can write that level down and see what price does at that point, so we can sell AU. And then pretty similar with NZD/USD as well. So NZD/USD, this is down. In 4-hour time frame, it's down as well. So like I just said on AUD/USD, our trend is above. The same thing here, we see our trend above. Eventually, NZD/USD is going to trade into this trend, right? When it gets here, it can now decide to either continue selling or break above and start forming a new trend. But for following what price is currently doing now, which is what we always want to do at all times, price is on a downtrend. So you can mark out the higher perspective we have on AU and NU, being the trends where price will eventually go to, right? But for now, these guys are down. So straight to the 1-hour time frame, sunshine has been printed. When I see this, where next am I going to? I'm going straight to my 1-minute time frame. However, on this NZD/USD, with how close my trend is, the probability of NZD/USD continue to print even further and trade all the way into this trend is high, right? So you might just keep buying and then get all the way to this level first before it now decides to sell. Regardless, we'll be watching to see and go with the flow of the market. So now I'm just going to mark up 5-minute time frame. The same thing I did on AU, I'm going to do here. Mark out yesterday's high. yesterday's low. Before yesterday's low, which happens to be very close here. And I prefer to delete all of these, but I don't want to waste time trying to get this center point so that I can easily delete them. But I believe we're seeing exactly where I'm drawing. So 1, 2, 3, 4 are the levels that I have marked up. Now, if you see on NZUSD, very similar to what I said on the 1 hour time frame, do you see the gap between where price currently is and where price is heading to? It still has a lot of space to the upside before it now continues the downtrend that we see on the 4 hour and the 1 hour time frame. It still has a lot of space. So for now, because I would have called this buy if I had seen it earlier, I'd have called the buy to catch the reversal back to my point of entry for a sell, but I didn't see it on time. So what will I be doing now? I'll just wait for price to get to my point of interest, which is this level. If price gets here, because it already broke above this. So if it gets here and I see a sell entry formation on the chart, I am going to attempt to sell, right? So mark out these levels, write them down if you have to, and then compare them to your own entry technique. If you see your entry is formed at that particular point in time, by all means, go for a sell. If not, we wait to see if price keeps breaking above. And then, of course, during New York session, if price does do that, we're going to reanalyze and tell you where the market's going further. Next, we're looking at USD CAD, and this guy has been bullish for a while, up on the 4 hour time frame as well. This is bullish on the 1 hour time frame. On the 1 hour time frame, now looking at our Keltner channels, they are clearly up. But if you're looking at price action in total, you'd see that price is starting to trade lower and lower. It hasn't taken out any relevant low though, so of course we're still bullish, right? But for this level, we've not seen any sunshine here. So the space for USD CAD to keep going down before it now continues its upward move there's still a lot of space. Until I see the sunshine printed here, then it gives me an idea that profit taking has occurred. Even though that sunshine can always reprint, of course, but that first sunshine being printed gives me an insight saying people who were taking this sell down have taken their profit and I should be expecting reversals at any point. So I've not seen that here. So I think USD CAD is still going to trade further down, most likely come back into this trend, which we have down here before it continues its upward move. So I've seen this, there's no sunshine, there's still downward movement. What I can do on USD CAD is to basically draw levels that I'm looking at USD CAD selling into before it finds some sort of support and continue its bullish move. So I'm going to mark out yesterday's high. Day before yesterday's low. Yesterday's low, which is exactly where price is now. So price is currently at yesterday's low. This could serve as some support, but this is what I think USD CAD is going to do. I think USD CAD is now going to buy back into this momentum which we have here. When it does this move, it's going to be a final move down, most likely breaking this level and trading all the way back into the support that we have here. So I'm seeing USD CAD doing this, going back up, clear all of this liquidity we have right here, and then trade back down into the support. Two things will happen when it gets here. It will find support, start creating structures to the upside, we'll follow the upside move, or it will break lower, we'll not see our entry formation, and we'll wait to see what price do, or what price does rather. And then during the New York session, of course, we will reanalyze and see what's happening. But yeah, you pretty much have the levels I'm looking at marked up. I hope you're writing the numbers down. When price gets to those levels, check to see if you see your entry patterns formed. If not, wait. But if you see your entry patterns formed, by all means, go ahead with the trade. And that's pretty much it for this session. I hope this was helpful. Please leave an emoji in the chat box for me if this was helpful to you. If you have any questions, this is the right time to ask. Yeah, I saw that as well, Mr. Ejimi Fuja. I saw that as well. But I didn't really look at that. I wasn't looking at that box formation playing out for myself because I don't use that to trade. I use all weather, but I did see the box formation that failed. Yeah. All right, thank you so much, Emmanuel. People online, thank you, Mr. Femi, thank you. We're now going to go in a very short break. My colleague is going to come on board and look at a few asset classes as well. And then eventually my boss, Mr. Ejimi, will come on and share some insights on fundamentals for us. We know FOMC came out yesterday, so I'm also looking forward to hearing his insights on that. Before we go, please remember to share the link with people. Share the link so that they join the second half of this session. All right? And remember, we have an event in Abuja coming up this month, ending of this month. Start preparing for it. You need to take permission from work. Take that permission from work so you are present for it. It's going to be a 2 days event full of trainings, training in total at no cost to you. So endeavor to be there. All right. Okay, with that being said, thank you, cheers, and God bless.
Good morning once again and welcome to the market color for today, 2nd of May 2024. Happy new month, everyone. And right about now, we are going into the analysis of the precious metal. And if you look at the precious metal from the higher time frame, let's take a look at it from the weekly time frame. We are going to see it's still very much bullish all the way to the upside until we see a clear break of market structure. But when you stream it down to the lower time frame, you are going to see what exactly is happening. Let's check on the daily time frame. Daily time frame, we already see some level of market structure shift on the daily time frame for the precious metal, of which you can see here somewhere around this place. There is a market structure shift since this level has been broken all the way to the downside. However, if you look at it on the 4-hour time frame too, you are going to see a clear market structure shift to the downside where a support zone has been broken and turned to resistance, more of a flip zone all the way to the downside. Now, if you go to your 1-hour time frame, you are going to see that too happening clearly there. We've seen a clear break of market structure, particularly our shoulder pattern has already printed, and that has happened somewhere around this place. Then market is going all the way to the downside. Now, this morning, after the release of the interest rate yesterday, which is still the same, and we see that the dollar is kind of a bit weak. After the release of the interest rate, every other pair of the USD all flew all the way to the upside, including gold itself. Everything rallied all the way to the upside. But after that rally, we see just few hours after it began to come all the way to the downside again, which is telling us something is going on the SY. Now, for the precious metal this morning, what are we looking out for and what are we expecting to see in the market? For those who are on our market color, our mailing list, you remember from the analysis we gave, this particular zone was where we expect the precious metal to start buying from all the way to the upside. But right now, we can see what is really going on the charts now. we see that the market has actually shifted to the downside. So we are looking for sell opportunity. However, if we see levels where liquidity has not been taken out, then we can easily take our buy all the way to the top. Now, if you look at it, we have a lot of diagonal liquidity somewhere around this place, all the way to this level. And if you draw your trend line just to follow this to the upside, if you draw your trend line, you are going to notice that we've had some level of break of trend line to the downside here from around this level here. You can see that. But if we look at the market, what is really going on right now for the precious metal, what do we actually want to do exactly for the precious metal? Knowing fully well that the weekly time frame is still telling us is bullish. Daily time frame, we've seen some level of market structure shift to the downside, and DSY would actually give us the real view. What are we expecting on it? So let's quickly take a look at DSY on the daily time frame. What is going on with DSY on the daily time frame? We've seen after the release of the news yesterday, it has just been ranging here, and this was yesterday news. And today again, it's coming back, of which we still expect DSY to come and tank all the way into this fair value gap that is being marked here before it continues all to the upside again. And if that is going to happen, then we expect the precious metal to rally on a normal condition. Now, back to the precious metal right now. What are we going to see? What is the trade for today for gold? Now, if you look at the 15-minute time frame for the precious metal, we've seen that it's been all the way to the upside. And if we are expecting that to happen, then this would be our zone where we would want to buy from. We can see the fair value gap here with the order block inside that zone. And we see our price take out this low and forcibly break this place high. So this is going to be our shoulder. You can see it. This is going to be our shoulder here. We've seen the sweep of that shoulder. So this is it. This is our shoulder. This is the sweep of it and forceful break to the upside. Now we are expecting price to come all the way and tap into that shoulder again. Now, before the shoulder, we have another block and we have the fair value gap there. So when price gets into this zone, we expect it to start buying all the way to the upside again, knowing fully well that we are still expecting DSY to tank to the downside a little bit more. And no, we all have to know that tomorrow is NFP, so we may see some kind of market, a bit of market manipulation, but the market still have to digest the news of yesterday, the violent move of yesterday to the downside. So this is just our outlook for the precious metal this morning, going forward into the New York session. Now let's quickly take a look at the yen basket. For the yen basket, remember, we've been anticipating the yen basket to be bullish, like we need it to buy all the way to the upside. And that is what we are seeing currently now for the yen basket, all the way to the upside. This is it on the daily time frame. Did it on the daily time frame to the upside. Now, if you check the 4-hour time frame, you are going to see, yes, it's now clear that, okay, seems like it broke structure on 4-hour time frame to the upside. However, we all know that the overall trend of the yen basket currently now is still a sell, but we've been seeing some level of, buy in the yen all the way to the upside. Now, if you look at it on the 1-hour time frame, what are we seeing on the 1-hour time frame? We've seen 1-hour time frame now is giving us a clean move to the upside. This is just a clear move to the upside. But the moment if price breaks this level again, sorry, please. If price breaks this level here, below here again, then we know the narrative is changing again. If price breaks this level again, then we know that the narrative is changing again. but we've seen it change all the way to the upside, all the way to the upside. Now, let's quickly take a look at the yen correlated pair, GJ. You know, yesterday I've been looking out for GJ since yesterday, but it seems it's just hiding from everyone. Now, this is it. GJ on the 1 hour time frame, you're going to see it all the way to the upside. But on 15-minute time frame, you are going to see something happened on 15-minute time frame for GJ. This is our shoulder pattern on 15-minute time frame for GJ. Just yesterday, sorry, please want to restore this. Okay. Now, this is the move that I was talking about yesterday. If you look at the 15-minute time frame, you are going to see that there was kind of a now looking at what we have here, I want to clearly so we can have a clear view. Good. Now, this is it. This is the move yesterday. We see the sharp break of this last swing yesterday evening to the downside. And after FOMC yesterday, we see that price came back into this level just for it to begin to sell. And the sell was a very massive one. The sell was a very massive one. This is it here. For GJ. So we've seen this a clear shoulder here and the sweep of it, and we've seen the break to the downside, of which we price came back all the way, tap into that shoulder and continue to sell all the way to the downside. Now, if you look at it on 1 hour time frame, you are going to see on 1 hour time frame where exactly is GJ going to and where is the POI. Remember this week rather, on Monday, we say that we are expecting price to come into this particular shoulder here, of which price did not get there. But if you look at the microstructure inside of that level, you are going to see inside of that level, you are going to see that price create another shoulder inside of it, which is that one I showed you on 15-minute time frame. And that is why we see this sharp move to the downside on that 15-minute shoulder, of which it correlates with our yen basket move to the upside. You know, we've been anticipating the yen basket move to the upside, and knowing even since last week, we've been saying we are trying to, you know, we've been expecting some level of buy of the yen all the way to the upside. Now, that is for the yen correlated pairs and the yen basket, also for the precious metal. If there's any question, you can easily ask in the chat box, and let's quickly take a look at it all together. Good morning, sir.
Good morning, Lekon. Good morning, Abigail. Great analysis, especially for Abby. Lekon, I saw that you struggled a bit in your analysis, and that's largely because the market is actually extremely volatile in this season. And there's something I would say: analyze every day, but you don't need to trade every day. There are days when the setups are going to be very clear, very evident for your entries. And there are days when the setups will be clear only after the market has moved and you will not have really been able to take anything from those entries. But like Lekon said, fantastic analysis. We have been waiting for some profit taking on the yen. They've been selling the yen forever. Yes, the volatility wants to wound someone's account. So now, I'll explain why that is happening. Lekon, please show us dollar index on the daily time frame. Dollar index on the daily time frame. Understand this: there are seasons where the market is dollar index on daily. Can we see it on daily? Okay, let's make it 4 hours. Okay, sorry, go back to daily. Go back to daily. All right. See what dollar started rallying 2024 January. Abi? Okay, March, yes, but the rally really started January, right? See where it started, 29th of December, or let us say 1st of January, then 11th of March, or when of March again? Yes, 8th of March again. Now let's see gold. This is where all the problem is. I was having a conversation with a trading friend of mine, and it was like, how's the market been? Now look at gold. Look at gold since 1st of January. What has gold been doing? Sharp move to the upside. Sharp move to the upside. Gold is buying, dollar is buying. That's the cause of all the problem you have been seeing in the market. That's really the cause of every problem you have been seeing in this market has been because of this. Because gold is typically supposed to be moving opposite to dollar. So let's see this on a weekly time frame. Learn some of these fundamental, okay, weekly time frame, that's 2023. This is gold moving up. Let's see dollar index, that same time frame. So gold typically moves in the opposite. You can see dollar has been moving down within that same period, right? Or ranging. So that's what has really caused the significant problem. Okay, see June of 2022 all the way to 2023. That's a sharp move to the upside on dollar index. Let's see what gold did around that time. And the reason why gold is going up is because of the wars, the tensions. So the geopolitical risk has messed up the flows. Let's see it on the monthly. I'm trying to explain all these wars and rumors of wars. To see from 2016, gold has been going up, right? Let's see dollar index. Dollar too, for a large part, was ranging to the downside before it now started going up. Now it is ranging. So gold and dollar typically do opposite things. So we can go back now to the daily time frame. So dollar on the daily time frame. So until we see a clear, so look at what has been happening April, May, that range there. So until we see a clear divergence between gold and dollar, we will see the market being very volatile, being very, very volatile. So that's what is causing all of this volatility. But with what we are seeing on dollar index, we've seen the box pattern, we've seen a break of structure to the downside, right? Showed that around October, November, it came all the way down. Now price has gone back into that fair value gap, and price is supposed to start coming down. But at the same time, remember what we said about box pattern failure. So where price is supposed to come down. But if that pattern fails, right, and price doesn't break below the levels that Lakon has projected or marked, then we are going to see a box pattern failure and price will continue to move to the upside. All right, but that's very unlikely because gold is strong and the other pairs are looking strong, okay? So this is why, as much as is possible, understand the kind of market environment you are trading in. Gold has been the one that has messed everything up in terms of sentiment. Everybody's just buying gold because they don't want to hear stories because of war, geopolitical risk. everyone is just buying gold. So that's why you see on gold, you see clear trends. So anytime the dollar sells off a little bit, gold will skyrocket. 4 hours, that's what we have been seeing even with FOMC yesterday. So with regard to the fundamentals, we are no longer seeing the possibility of a clear rate hike, right? We're no longer seeing the possibility of a clear rate cut with the dollar. So because there's no clear rate cut on the dollar, like we thought there would be earlier this year, it's looking like they want to just maintain the rate. So it's now up to the other central banks to start increasing their interest rates, banks like Japan. And I'm still looking at CHF-JPY. That's my basic indicator, CHF-JPY. CHF-JPY. That's my basic indicator to see what will happen on the yen. I was expecting the yen to buy, but this volatility is just too fast and too far. There's nowhere to place your stops. No clear-cut place to place your stops. I mean, this sharp move that is looking small like this is almost 800 to 1,000 pips. So it's very, very tricky. Very tricky. But as it is, with what I'm seeing, I have a funny feeling that the yen will still continue to weaken. So we should just be looking for buys on the yen pairs. Why? CHF-JPY came down. Did it close below the low of April? Let's see that low of April. After the liquidity sweep, did it break below? No. Rather, it looked like it formed a shoulder. See the shoulder around March. Then it formed a sweep. Then it formed a break of structure to the upside. These are upside down box pattern. Then it came back down. Look at the liquidity, diagonal liquidity. It induced it. Let's zoom in a bit. That's our shoulder there. That's our sweep there. That's our diagonal liquidity. Our slanting liquidity to the downside, right? So I was thinking that all these fundamentals would cause it to break below, but it didn't, to the downside. Tapped below, and then now it's going back all the way up, all the way up. So based on this, one is, let's look at it at the 4-hour. Okay, we can zoom out a bit. Okay, so that is the level to the downside. Let's do our box pattern at the top. Shoulder sweep. Box pattern at the top. That's the sweep. And so that's a shoulder. Even the one before it too is a shoulder. Anything from 20th of March, that's a shoulder too. 20th of March. 20th of March. Sorry, of February. We look at all the way up. There, that place up there. That's the shoulder. So you can take it up. That's a shoulder. That's a sweep. That's a break of structure. That's our shoulder. That's our sweep. No, you can reduce it. That is too fat. That's almost 200 pips. It's too fat. Just do the week, from week to close. No. That high of February to the close. Forget about all the other shoulders formed in April and March. Forget about those ones because price has swept the highest shoulder. So we are making reference to the highest shoulder now. Exactly. Forget about all those ones. It's no more relevant. They've grabbed the liquidity there. So we're seeing price trying to go back and mitigate. Zoom in a bit. Zoom in a bit. Let's look at that place very well. Zoom in. Let's make the candles bigger. Okay, so see our resistance liquidity, our trend line resistance. Trend line resistance. Trend line resistance. No, not from there, not from there. From the above the shoulder, there's a fair value gap there. No, not support resistance. I'm not support liquidity, resistance. Diagonal resistance, not diagonal support, diagonal resistance. Yes. There's a fair value gap there. The diagonal resistance from 172.36 all the way down. So that's the fair value gap. Take it from that high. Not from the fair value gap, from that high after the fair value gap. That high after the fair value gap. No, down, down. After the fair value gap was formed, there's another high. You know, the sharper the diagonal liquidity, the clearer it is. The more slanted a diagonal liquidity is, the higher the probability that price will grab it. Exactly there. Touching to that fair value gap, that the next fair value gap that was formed. Exactly. So you can reduce the size of the trend line. Let it just touch. Exactly. Shrink it back. Exactly. That's how you note diagonal liquidity. The steeper, the sharper the slant, the higher the probability. So there's diagonal liquidity there. There's a fair value gap there. There's a fair value gap there. So there is every reason for price to get to that level, tap into it, 50% of it, and then come all the way down. Now, if price breaks above that level, then I know that the sellers have lost the battle and CHFJPY is going to the sky, to the sky, to the sky. Now, someone can look and say it's at an all-time high, but if you check it on the monthly or anything higher than the monthly, let's see that you will see that it's not exactly unusual for price to be where it is in terms of breaking structure, forming a cup pattern, and moving up. So there is that clear possibility. There is that clear possibility that it just wants to keep going. All right, so go back now. So we've drawn our box pattern on the left, to the upside, and box pattern to the downside. That's where we expect price to tap into. And then if it taps into that, we look at those levels, look for any reversal pattern, stopper shocker, morning star, evening star, and then just trade it to the downside. The reason why I keep mentioning CHFJPY is because, like I told you earlier, Swiss franc reducing interest rates, Japanese Bank of Japan increasing their interest rates. So there is every reason for that to play out, okay? Now, with regard to short-term trades for today, tomorrow is non-farm payroll, but with regard to short-term trades for today, very short-term trades for today, we're looking at dollar, and we're seeing some sort of weakness in the dollar. So if on the euro, if you check the euro, so I'm done with CHFJPY. You can take note of this chart and just screen grab it. If you check Euro USD, same box pattern, quick scalps if you want to take those scalps. Quick scalps if you want to take those scalps. Okay, so zoom in a bit. Zoom in a bit for entries. Zoom in a bit. Make the candles bigger. Okay, all right. So, okay. So where we are seeing now, there's a box pattern there. You can see their shoulder, sweep, break of structure to the downside, another break of structure to the downside again. So where price is there, price is supposed to sell off. But we're waiting for box pattern failure. Price is supposed to sell off there. And if it sells off, where is it going to? It's going to that fair value gap. and going to that fair value gap. No, there's a fair value gap below. See the diagonal liquidity. So these are things I want you to train your eyes to see. Zoom in, Lekon. Zoom in. Make the candles bigger. See what is forming right here. That's diagonal liquidity now. That is support liquidity. The last three candles, that's support liquidity. That's it. They're very sharp. Exactly now, that's support liquidity into a fair value gap. Support liquidity into a fair value gap. That's the support liquidity into a fair value gap with an order block at the base. Order block at the base, right? Exactly. Exactly. Then below that too, there's another liquidity, support liquidity, and a fair value gap below. Support liquidity and a fair value gap below. You can see the fair value gap there. Diagonal support liquidity, fair value gap. All right, so price is supposed to, based on that shoulder that it has entered, price is supposed to come down, all the way down, all the way down. And if it's truly going to sell, it's supposed to break through that support liquidity, that fair value gap, that support liquidity below, the fair value gap below it, and just continue going down, right? So if this box pattern fails and price comes into the first one, it's not yet low enough. If it comes into the second one, it's supposed to keep going down if truly it is selling. So if at those places price starts to hesitate, then that means there's going to be a box pattern failure. I don't know if this makes sense to anybody. There's going to be a box pattern failure. And if there's going to be a box pattern failure, price is just going to tap into those levels, come down. You can zoom out now because I want to see that your fair value gap to the upside. Exactly. So price will tap into this, tap into the one below, right? And then where is it going to? Going all the way up. All the way up. So these are the trades one is looking at. A break of structure to the downside, declares that liquidity, taps into this, then that's a quick sell. After that, it's going to 650, 1.0650 levels. And if it cannot break that 1.0650 levels, is turning around at that exact 1.0650 levels and is going straight for 1.0811. So we should be able to get a very nice trade with good risk to reward ratio. We're looking somewhere around, our stop being somewhere around 1.0625 and our take profit going all the way to the upside. So you can, yes, somewhere there, below there, yes. Below that, yes, somewhere around there. And then price hitting it all the way to the upside. So once price comes into that level, you can further refine it. This is 4 hours. You can further refine it, let's say on 15 minutes to see. So now someone can ask and say, can we sell here? Yes, you can. Very well, Seth. Very, very well, Seth. Why? Look at a shoulder. Look at a sweep about to clear that liquidity all the way down, all the way down. So those of you who may want to take that trade, there's an inducement there. That's a shoulder there. That's a sweep. Grabbed the liquidity, tapped into that shoulder, and is coming down all the way. So those who want to sell here, just check the dollar index and make sure it's climbing higher. You tap into that. Where are we going? If it breaks that level, see where it's going next. There, exactly. Exactly, that's where it's going. So around 1.6, 1.670 levels. So a quick sell here with your stop at that high. You're doing very well. But check DXY. Let's see DXY. Let's see DXY. If DXY is not inching higher, forget about this trade. You see DXY is not inching higher. It's not inching higher at all. DXY should be breaking structure to the upside and clearing into all that fair value gap that is above. DXY should not be forming wicks. So it is not. So this kind of trade, you put them side by side, you look at DXY, and you look at Euro USD, and you want to see that divergence, and you want to take it. All right? So I think I've spoken quite a bit today, but I hope it has been helpful. Same play for GU, yes. Same play for GU, exactly. So, and we are seeing all the fair value gaps. We are seeing all the liquidity to the upside. Look at that diagonal resistance. It's just there, sweet. Diagonal resistance is also there. So if it breaks, of course, you can take your move to the downside. Maintain stop loss. This is not the trading environment where you trade without stop loss. Your eye, it will shock you. You may not even see the volatility coming. This is the time to take your losses if you have losses. This is not the time to increase, to do dollar cost averaging. This is not the time, especially on yen pairs or on gold. Respect your stop loss to protect you. All right, so any question for me? Any specific question? If you don't understand what was said, by now you should know these concepts: shoulder, sweep, break of structure to the downside, diagonal liquidity, fair value gaps. You should understand these concepts. Does value flow model cost covers in depth? No, we don't have any fundamental costs. We don't have any fundamental costs. What I've already told you what I do for fundamentals. I told you the people I follow. I follow Forex Live. I follow Darius Dale. So what I do is I just look at the headlines. I look at the commentary on Forex Live. I look at the interest rates, the releases as they're coming out. Is there a rate hike? Is there a rate cut? I look at divergence, a time when a central bank is reducing and another central bank is increasing at the exact same time. But I don't do fundamentals. Not because fundamentals are tricky. They are very tricky. You think you know it, something will happen. So I just look at my value flow models on a higher time frame. When I look at value flow models on a higher time frame, it gives me an idea of what the fundamentals look like. For example, the way I keep saying that I'm expecting yen pairs to start selling and the yen to buy is because of my value flow models. I'm looking at what is happening in the bond markets, and it is telling me, is there a reason silver is not a major asset to look at? Spread. That's the reason. Silver and gold go the same way with the other precious metals, but the spread on silver is crazy. Anything silver will do, gold will do. The spread on silver, I don't know if any of you have actually taken trades on silver. That spread, you will respect it. Price will move. You'll still be in minus. So that's why I don't really like silver. Whatever you want to do, let's look at silver, let's look at gold. Leko, please, if you can give us silver. If you can give us silver and just look at gold and silver. The spread on those guys, on all the commercial metals, generally, commercial metals, the commercial metal or industrial metals, silver is X, I think platinum is XPT, silver is, what is silver again? XAG, that's the scientific name. XAG USD, silver spot, that's it there. Silver spot. In fact, silver is a fantastic, that's a great question. Silver is a fantastic asset because silver has industrial use. That's commercial use. So we can reduce this. Then you see what silver has been doing. Maybe look at it on the daily. Let's see it on the daily. Okay, so see the flow of silver. Where did it reverse? Then compare this. Let's see if you can add gold. You add gold to the chart. If not, just check it side by side. Okay, just put gold. Just put gold. No need to change it to gold. To add, you just do overlay. Change it to. Hey, fantastic. Thank you. But make sure it's the same time frame, it's the same shift, it's the same everything. So they do the same thing. They pretty much do the same thing. Zoom out. Let us be looking at the same period of time. When did gold start selling? And when did gold start buying? So gold and silver actually are correlated. Okay, someone is saying, hey, Sir Jerry, well done, sir. You are shorting Euro USD from 0.726, but caution at the box at 0.66. Aha, fantastic. Thank you, Sir Jerry. So it's pretty much the same thing. The sentiment based on the rate being unchanged could leave fantastic. Fantastic. So we're pretty much seeing the same thing. So you see what's happening now. Silver has formed a lower low on the daily. Gold too formed a lower low on the daily. So we can use this as confirmation. We can use this as confirmation. So for example, there's a fair value gap on silver at 28. At 28. There's a fair value gap on gold at 2,340. Now, it's not looking like silver wants to close its fair value gap. And so gold too may not close its fair value gap. So this is how I use them. But to actually take trades on silver, except I'm wrong, gold. The last time I tried it, I didn't like the spread and I left it alone. But it's a fantastic way of, even that's something Lekon uses a lot for his precious metals analysis. So I think that's answered that question. If there are no other questions, please, guys, we're having a training in Abuja, end of the month, 30th and 31st, a Thursday and a Friday. Everything we say here, we're going to be teaching is purely trainings. It's not motivational speaking alone where we come and encourage you. No, it's capacity building. We're going to be looking at the market. We're going to be having different sessions, looking at different pairs, how to analyze, discussing how to analyze sentiment. And it's totally free, right? The bulk of the trainings are free. The event is free. You just have to register. Please start telling your friends. Start telling your friends. We're also going to be having a session on bots, automated trading. We'll be discussing and showcasing bots and how you can add them to your portfolio. Will it be live streamed? I don't know yet if we'll be making it live streamed. A portion will be live streamed. Some portions may not be live streamed because of the nature of what we will be teaching. Okay, so that's basically it. Having one in Abuja. When are you coming to Lagos? We're going to plan it. These trainings are quite expensive to host, so we have to plan it very well. Okay, but of course we're working on it. We're working on it. Yes, so 30th and 31st, let your friends know. We're going to be having algorithmic trading, robots. We're giving out a few resources. Few people will win some bots for free and some value flow models, and it's going to be a fantastic time. For those of you who also want to do things like money management, those of you who want to learn the other side of FX in terms of fund management, in terms of affiliates, we're going to be launching quite a number of things there. So please mark it on your calendars and spread the word. All right. How much is registration? My brother will come. It's free. It's free. It's totally free. All right. It's totally free. That's Value Flow Trading's contribution to the trading ecosystem. And it's training. You know, yeah, motivation. No, who motivate? You need motivation in this industry, but there'll be a lot of training. Okay. We're going to have a paid session, one paid session for about 2-3 hours in those 2 days. One paid session, but it's going to be for a very small number of people who want it, right? But aside from that, every other session, every other training is purely free of charge. Those of you who show up here that on our market color and we'll be there in person, we'll be waiting and taking note of you so that when we do our freebies or our giveaway, we'll make one giveaway specifically for those who are committed to our market caller and have been committed for a while. Please trade safely. We can't wait for Lagos own. Yeah, we'll plan towards something in Lagos later in the year. Just give us time to plan for it. But Abuja is where we are focused on right now for our event, okay? So the flyers will be out soon. The venue and everything will be out soon, all right? We in Oweri are waiting patiently. Oweri, all right? No wahala. Lekon, thank you for your patience. I've talked a lot today. So cheers. God bless. Over to you guys on the floor.
Thank you very much, sir. Thank you very much, sir. So this will be the end of today's top-down analysis. Already, people, don't worry, coming soon. All right, so till we meet again by 3 p.m., make sure you are there. Share the link with everyone, and we are going to meet by 3 p.m. once again for the New York recap of the market column. Thank you, cheers, and God bless.